here uses Postmates or DoorDash or any type of food delivery service, Uber Eats or anything, right? You guys do? I do. I spend way too much money on that. Okay, well, we got Teresa on here with no camera. Hi, Teresa. Hope you're enjoying the show. And hello, Julie, joining us right now.
Hello.
Also, no camera. We got a bunch of shy non-participants today.
Is this the Julie that needed the photographer? Did you guys sync up?
I couldn't tell you because she's not on camera.
I'm trying. Oh, I forgot I had my little thingy.
There she is.
Yeah, I actually was in contact with her yesterday, so thank you so much.
Okay, good.
I really appreciate that. She seems like she's
Bree's great. She's really sweet, and she'll get you in there. She does, I think, like Corona all the way down to San Diego.
Perfect. That's what I need. Corona and Riverside. So
perfect.
How cool is that, Julie? We got you a copywriter, we got you a sign person, and we got you a photographer in like 20 seconds. It was amazing.
like no time.
And you didn't even have to pay your other former brokerage like $30,000 to get that to happen, right?
Yes, and I appreciate that very much.
And that's the difference, right? Is like your broker, other brokerages will wipe your booty for you, but they charge you a lot. I mean, they might as well be wiping it with your $100 bills.
That's pretty much what they did. And so I was like, John, I would just send an email and this stuff would get done. What do I do? And it's a no-brainer. It's
you
like,
just email us. It's easy. We'll take care of it for you. We'll connect you. Like we always say, right? The way we've built this whole structure for our group is like, if you have a question, just come to the next appropriate person and we'll keep finding people to get that answered for you until we run out. And if you can't get the right answer from Justin or me or Meyer or Dan or Kyle or whoever, like chances are there isn't an answer. Yeah, Joe Turco probably knows the answer. He's willing to hop on and help.
I appreciate it because like I said, I didn't have to do, I just sent an email and I prefer doing it myself because then I get more money in my pocket.
Well, and that's the point, right? They want to handcuff you with this like fake value, right? Companies I worked at for a long time were like, we have a marketing department. Well, guess what a marketing department is? A marketing department is an overworked, very sad young girl who might have some type of design background, right? And some kind of like medium level graphic designer. That's a marketing department. And the reality is if I want to queue myself up as order number 1,000 with my other compatriots at my brokerage so we can all dump our for sale flyer on this girl's desk so that she can just template drop the same crap onto there.
Yeah.
Right? We can all have a free marketing department in which we pay $100,000 a year through our commissions to be able to sustain that salary along with the salary of, the broker who's been there for 30 years and the office manager who takes 4-hour lunches and all that other stuff. Or
I have to say though, our office manager worked her behind off. She was amazing.
Yes, not all office managers.
I have to say
not anyone specifically.
And even now, even though I need things from her, just I don't have access, she's still very sorry. That's my little puppy. She's still very responsive. So.
We're very pet friendly. Yeah, and the reality is all I'm trying to prove is that everything in real estate, everything that another broker or anybody can provide you, right? That can all be figured out on your own. And when you're talking about building a business, the most powerful way to do it is to build your own brand, to build your own relationships, to build your own, database, put it wherever you want to put it, but make it yours, make it something you own, make the, when you make a video, right, brand it to yourself. Like there's so many things you can do to take ownership of your business because it really is your business. Right? It's not their business. Somebody called and said, hey, I was looking for a Coldwell Banker agent and I got to page 17 of the roster and I found your pretty blue eyes and I wanted to work with you. That never, ever, 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 ever happened, right? Nobody ever got to page 17 of the Coldwell Banker roster and called me to hire me, right? They all hired me because why, right? I was either in front of them in marketing, in video, phone call, door knocking, right? Or somebody that I know was in front of them at the time in which the conversation came up where they said, hey, we're thinking about maybe buying or we're thinking about maybe selling. So as long as you can understand kind of the workflow and you can build that all around, right? All right, cool. We got on a random tangent. Look at all these friendly faces that have hopped on. Nice to see you guys. Most of you look friendly, except maybe this Drake guy. I don't know about Drake.
Hi, I'm Drake. Nice to meet you.
Hi, Drake. Nice to meet you. I'm John. Awesome. Well, thanks for joining us, guys. I think I have you all on the screen, although it looks like there's a lot of you over here. First, I'd love to start out with just some wins this week. It is a bloody market. If I showed you anything from here down, you guys would see I'm just covered in blood right now. I don't know about you guys, but I've taken quite the beating this week. Anybody else feel like it's tough out there right now? Yeah, just me. Who has a win? Tell me somebody who had something good happen this week. Nobody.
I had my best week in like 3 weeks, so.
Yes, there it is. I knew law of averages says that one of us has to be having a good week, right?
And I might have lost. I may have gotten rejected on 2 deals today. I don't even care. I still had my best week in like 3 weeks.
So what's the lesson in that though, right?
I don't know. You tell me, John.
The lesson in that is that the quality is in the quantity, right?
Okay. Yeah.
You got rejected on 2 deals, and yet you still had an amazing week. Why? Because it wasn't just those 2 deals, right?
Right. Yeah.
You weren't baby birding them, right? A lot of times what we see agents do, nobody on this call, definitely not Drake, but we get 1 deal, right? We get this little baby bird egg that we gotta like blow on and like massage and make sure that we carry it everywhere we go, right? I'll pick on Julie. I know Julie's a baby birder, right? She's got her 1 deal. She's like, this is my deal. It's all I've got. And then guess what? We trip on a branch in the forest, and next thing you know, the baby bird is breakfast. And that's an omelet right there. And that's the end of it, right? And so if you're gonna baby bird your business, you're gonna end up eating scrambled eggs for breakfast. And if you're gonna be a boss, right, you're gonna have multiple irons in the fire. Nicole and I mean, I'll throw Nicole under the bus on this one too, right? She's taken a bit of a beating in the last couple of weeks, right? And Nicole, what you lost a few, right? But how'd you continue to keep up, with the good attitude and good momentum?
I just got my clients in line and I just got them back into escrow. I literally talked to an agent on Monday and I was the first showing and I was like, you need to give me this house. And what is it going to take to shut down your showings and to accept our offer? And so I had to cancel their previous escrow over like a $15,000 structural issue. It was no bueno. Then we just regrouped and I was like, where do you guys really want to be? Like, what are we doing here? And just had like that come to Jesus talk, and they're digital shoppers, not living in the state at the moment. So that's an extra level of challenge. But I went the next day, found them this house that was like a coming soon, much better than the one that they were looking at in the same community. And I was like, this is your house. Like, this is what we're doing.
So how did you get the agent to pull it from the market and take your offer, especially because the clients are from out of the area, they hadn't seen it in person? Like that's dicey. As a listing agent, like I don't think I'm going to take you up on that. So how'd you pull that off?
I wrote a really strong, I called them. I said, listen, what is it going to take? What do you guys need? Like, what do your sellers need from this deal? Are they reasonable? What do they want? What are they looking for in terms of price? And I'm not going to lie. Yeah, we came over list. And we're definitely pushing the community high price, but for this market, I'm not that worried about it. I gave 5K appraisal gap coverage, but I left the contingency in. I offered to release the EMD upon full contingency removal. So they're getting that $24,000 right away, 3% EMD. They're still giving us a home warranty. The house is only 6 years old.
I would quit. I can quit real estate right now. If nothing else, knowing that I've helped Nicole get to that level. And Nicole, how many decades have you been selling real estate?
No decades, like a year and a half.
Like a year and a half, right? And I met Nicole when she was first licensed, and I am so proud of what she just said, because she said like 6 things in there that I didn't even teach her. Number 1, number 2, that is the most masterful version of getting your shit done I've heard in a long time. And for anybody does everyone on this call know what appraisal gap coverage is? Because this is a new buzzword and I love it.
It's much better than waiving the contingency completely. It gives you some recourse.
Yeah, so what does it look like? So explain appraisal gap coverage for those who might not know.
Okay, so say you put in, say the house is listed at 790, you go up to 820 because you just want to get everyone else out of your way. So you go high and you think that you can handle that pricing. However, it may not appraise, right? The lender is the only one that cares about appraisal. Buyer doesn't care and seller doesn't care. They've already agreed on the price. Sorry about my messages, guys. So basically what you're saying with appraisal gap coverage, and you can pick the figure, it can be any number that your buyer is comfortable with. You assign a figure to it and say, hey, we're willing to offer $5, $10, $15, $20,000 of appraisal gap coverage. So we will still be ordering an appraisal for our loan, but if I did 5K, so the house is under contract at 800. If the appraisal comes in at 795 or higher, we'll cover the difference. We're willing to put 5K on it to cover that gap. If it's more than 5K, we're gonna have to renegotiate.
And ultimately, the seller doesn't have to renegotiate. The seller can tell you to F off if you don't, you can't get the loan.
Right, but then you're 2 to 3 weeks into escrow, and who wants to go back on the market at that point?
Nobody wants to push you out of the deal. But again, it's a matter of, can the seller live with it, right? So Nicole's in at 800. She has appraisal gap coverage down to 795. The deal comes in at 790. Not that big of a deal, right? We have another $5,000 we got to cover. Buyer comes up with a little bit of it. Seller comes up with a little bit of it. Somebody's going to end up shaking the tree to see if anybody is, loose pants commission, right? So see if Joe Turco's on the other side of the deal, giving away all his money. But really, ultimately, like, that's a problem we can solve. Appraisal comes in at 750. I think we have more of a problem, right? And at that point, the listing agent and Nicole are probably going to get together and say, what are our options? Can we order another appraisal? Can we switch lenders? Is this deal just dead? And a lot of times, like, that's what ends up happening, right? Is like, if you kick Nicole out of the deal and if you put it back on the market and start over and get a new buyer and everything else, like, you're probably going to end up with a different lender in a different scenario in which you get an appraisal. I haven't seen many appraisals come in short these days, even though we're in a rapidly ascending market. Who has seen an appraisal come in short in the last 3 months? Anybody? Joe, what happened?
We were able to.
What was the price point? What did it come in at?
So, price point was $675. And it came in at $655. So we were able to come up with 5,000 cash, and the rest was lowered in price.
Okay, so you got the seller to make a concession.
Me in the middle.
On that, did you anticipate that being an appraisal issue ahead of time, or did that kind of come out of the blue?
Nope, it came out of the blue because there was a gap in comps based on COVID.
Okay, so again, they happen, right? We saw a lot more of this back in 2013, where we saw low appraisals. And the reason that we saw so much more of it coming out of the recession versus what we see now is, in my opinion, right? I'm not an appraiser and I'm not a financial lending authority or any of those things. But what I think it is it comes back to risk, and it comes back to sort of the flavor of the moment, right? And at the time, everybody had really lost a lot of money, and the banks had really suffered, and the government had come and bailed them out. And we had really run ourselves off a cliff by not making sure that the people buying homes were well qualified to buy them and all those things. Well, this go around, right? The standards are really high. You really do have to make money in order to qualify for a loan. The loan to value ratios really have to be there, right? Even if it's 5% down, like they're really protecting. And because of the low interest rates, and because you can't really get a high yield in a lot of places, they're very anxious to put this money out there in the system, right? There's too much money in everybody's pockets. And that may not be everybody on this call, but in general, right? There's a lot of liquidity in the market, in the financial institutions' hands, in corporations' hands, in our hands, the American public, right? When you put a cash influx of money in people's pocket, where does it not go? Where's the last place when you give Americans a $2,000 check? Where does it not end up?
Where it's supposed to be.
It doesn't end up in their savings account. That's for sure, right? We are not great savers in America.
I guess I should go buy something expensive then, huh?
Yeah, it might end up in a new jacuzzi. It
Mhm.
might
Yeah.
no comment. It might end up in their Robinhood account, so they can buy some GameStop with it. It might end up down at the mall, right? When they reopen, buying a bunch of Jordans and Nikes and whatever else, right?
Don't
It
hate,
will-
don't hate, don't hate.
I don't hate, it's whatever you want to spend it on, but it goes out, right? It goes back out into the world. And because of that, we've seen that money, right? This money didn't exist before. So we have this magic money that we created, which we'll call government debt. And then we blast it out into the universe and put it in everybody's pocket. And it doesn't just get burned and lit on fire. It all finds its way back to the same place. It all finds its way back to the top of the food chain. It all finds its way back somehow to the rich people's pockets. That's where the money goes, right? So anytime you want to learn how things work, just follow the money. But right now, right, lenders, because they have too much money, they need to put that money out there in the world. And so that's why I don't think we're seeing a ton of appraisal issues. But we will, right? As the money starts to run out, as things start to get riskier, as people fear that we're closer to a potential housing correction, all of those things are going to bear in mind to the lending side, and they're going to start to tighten up their guidelines, and they're going to start to tell their appraisal pool, hey, be a little more legit on it. And the only way that's going to happen is when people start getting foreclosed on and things start, when banks start losing money and all that stuff. So
John, every time that comes up on this call, you're like, yeah, you blow it off like it's not anywhere in our like orbit right now. So like,
when is that coming?
reconcile that for us. Like you make it seem like
that's good. Yeah.
Never going to happen. Right.
No, it's a really good, I'm really glad you asked that, because it's really important, right? And we don't want to find ourselves in a position where we have our pants down, right? Because we all found ourselves in that position before. Anybody who's been in the business long enough. So what we're looking at, right? Number one is lending guidelines. All those things that I just talked about are really, really important to understand how these people are getting into homes. We have more equity in homes in America right now than we've ever had. American homeowners are in a better position, the ones that own homes, right? A lot of people rent. But the ones who actually own homes, they have more equity than they've ever had. So what we see is we see a buffer against a potential correction. So let's say, hypothetically, we came out of a severe seller's market, right? Would we all agree that there are not enough homes for sale on the market where we sell houses? Everybody? Yeah. So if we came out of that and all of a sudden we started to go from a extreme seller's market to a seller's market, to a balanced market, to a slight buyer's market, to a buyer's market, right? You see the ladder that we got to climb there. If we got to that point, and then as we move towards a buyer's market, what will happen, right? Prices will start to come down. If we see prices start to come down, right? People who need to sell, people who might not be able to afford their monthly payment, people who otherwise, right, want to move, hey, this isn't my forever home, whatever. Well, they start making the decision to, hey, I need to get out, right? It becomes, real estate becomes a falling knife. Real estate becomes a race to the bottom, right? But it only becomes a race to the bottom for the people that want to get in the race. And so if the majority of homeowners have a lot of equity, and everyone has not everyone, most everyone has a low, historically low, could never be cheaper interest rate, how do you force people into a selling position? Because worst case scenario, you move out and you put a renter in and the property cash flows because you have enough equity and you have a low enough interest rate. And so I don't see a scenario on the horizon, short of global financial meltdown, et cetera, that causes us to find ourselves in a supply and demand scenario in which we end up with so many sellers that prices fall low enough that everybody gets beat up on it. I just don't see that happening.
I guess my follow-up question, I may have just answered it myself in my own head, but what about all the people buying it right now? God knows how much about what these houses are actually worth. Is it just that there are so few of them because of the supply that like it won't balance against everybody that has too much equity or historically high equity? Is that what you're, is that the calculus we're banking on?
No, it's a matter. So I heard a cool quote the other day that said, this is about the financial markets, but it applies to real estate market too. More money has been lost in the anticipation of a correction than you ever would have lost in a correction. So this goes back to, I'm on tape. You can pull my tape up. Nicole probably heard it a year and a half ago, and we go back 3 or 4 years before that. And I'm on tape as being like, guys, There's going to be a correction. Interest rates are going to go up, guys. Interest rates someday 3.5%, 4%, 5%, right? And we have a major affordability crisis when interest rates go up. So if interest rates go from 2.5 to 3, and then 3 to 3.5, and 3.5 to 5, right? If we get to 4 or 5% interest rates, and the higher the prices go, the lower the interest rates have to be in order for everyone to afford it. So if everybody's house was $800,000 today, and then all of a sudden, right, prices went up to $1 million, and the rates, everybody's rate was 3%, right? But now the new price is $1 million. Well, if rates go up to 3.5 or 4%, there's going to be no new buyers that can afford to pay that price. So either rates are going to hit that number and they're just going to stay there, and then that becomes the flat line that every house is worth, right? We can't really break through that ceiling because it's not like we couldn't pay more. It's that literally no one can afford to pay more.
Right.
Or we find ourselves in a position where we eclipse that, right? And now because of that, homeowners have to start pricing their home accordingly and start to ratchet it down. But the ultimate, how this all balances out, right, really comes back to rent. Because if you can afford to buy for the same amount as it would cost you to rent, then it doesn't matter what the price is. It matters what the payment is. And so we're qualifying buyers at these numbers, the value. You said, you're like, well, what's it worth? How can it be worth 800? How can it be worth 850? People are using the same math and looking at the same phenomenon in stocks, right? If you guys are familiar with stocks, you'll know that very frequently, price to earnings ratio, right, or a forward earnings, you're looking at like a 17 or 18 or 19 times multiple, right? If you want to take a major index. And you want the S&P 500 to be trading at like a 17 times multiple. Let's just call that the number, right? Well, nowadays, because of the liquidity, because of rates, because of yield, now they're saying that these numbers might need to be ratcheted up. Maybe the days of a 17 times multiple are gone forever, right? Maybe we're talking about 20, 21, 22, 24. So we're changing the way in which we value stocks and real estate and everything else, because we are in an unprecedented time of globalization, of low interest rates, of so many economic factors that you can't even, we don't know, honestly, this has never happened before. So we literally have no idea where this goes from here, but there's an unprecedented amount of money in the system. And what we're trying to find is some inflation. So what happens with inflation that's actually good for us? Right? Real estate values go up. Real estate has long been seen as the biggest hedge against inflation. Why did all our parents get rich? Because they bought their house in the 70s and 80s, right? Because inflation hit. And if you owned real estate during that time, you saw property values go from $30,000, right? In Orange County, you could buy a home for $30,000. And just a few years later, literally those same homes were worth $300,000. 30,000 to 300,000. Now that's not safe. That's not healthy. That's not good. That was an economic crisis that had all of its own problems associated with it. But who was the winner, right? The homeowners with equity appreciation through those interest rate hikes or inflationary hikes. And so what I would say is we're trying to catch a little bit of inflation. We're trying to hit an inflation target, and we can't catch up to it. And the number one reason we can't catch up to the inflation target is because of globalization. And so the fact that, does anyone here on this call wearing a hoodie have a virtual assistant, a VA, an international VA? Anybody? Oh, perfect, Joe. So Joe, how much, if you don't mind me asking, does your VA get paid per hour? Roughly.
I have a couple.
Okay,
so
how much does the average VA make per hour?
$5 an hour. US.
Okay, that's actually a pretty good VA. I've interviewed VAs that cost $2 an hour or $3 an hour. They kind of speak English, like whatever. It doesn't really matter. It ultimately depends on what their task.
What are they doing for you for $2 an hour?
That's the question. That's the question, right? What is their skill set that can translate for $2 an hour? But here's the thing. This is across everything. A VA is one small example of the globalization and why we can't find inflation. Because if I can go get somebody in the Philippines to do the same thing that I would hire somebody to do in America, but I can get them to do it for 1/10 of the cost, or a quarter of the cost, or whatever variable that is, then that has a very deflationary effect. When toys are made in China for cheap, that is a deflationary effect, right? The cost of the goods is not going up because it is cheaper to produce them abroad. So rather than having inflationary pressures domestically, we have a globalized economy that is actually very deflationary in value. Does that all make sense to everybody? Do you guys understand how those things like intricately tie together and why we're not at the precipice of a housing correction?
Can I ask a quick question?
Yeah.
I'm sure you covered it. I might have missed it because there's a lot of information there. But um, I currently deal with clients right now who are when I'm talking about buying a home, they're telling me that they don't want to. They're worried about paying so much over asking price because they're worried that because they're not looking for the forever home. They've made that very clear. They're looking for a home that they can sell in 2 or 3 years. And so I'm finding myself having to like kind of talk them off the ledge when I'm saying, hey, we need to go 30, 40, $50,000 over asking price because they're always saying to me, if I go that high, when we go back to sell, it's not going to be that price at that time. So like what do you either kind of think about like people saying that they don't feel like they're going to get the same value in 3 years as opposed to what is going on right now?
Cool. Awesome question, Don. Can you be them and I'll be you?
Sure, yeah.
Okay, cool. So, hey, Dylan, this house, honestly, of everything we've seen, it really feels like it's the one, don't you think?
Yeah, it feels like it's the one. How much do you think we should offer on it?
You know, it's priced at like 595, and I know you're pre-approved up to about 650. I think it's probably going to end up at like 615 or 620. I don't know. We're going to have to just put our best foot forward. Um, you know, obviously all the houses are selling probably for more than asking that we've looked at. I mean, a few of them, right, were way overpriced and that didn't happen. But this is just kind of the market at the moment that we're in. So what do you think about putting in an offer? I mean, have you thought about a number that's comfortable for you, that's going to be achievable, where we're actually going to get the deal?
Yeah, I mean, I don't know. I feel like we don't really want to go too high over asking price because I know that we're going to be selling in like 3 years.
Yeah,
So
totally.
I don't
Well,
want to lose value there.
let's break it down really quick though. Hold on one second, because remember we talked about there's some properties that are selling over asking, and that's most of them, right? And then there's a few properties that are not selling over asking. In fact, they're not selling at all. So this same property, right, it's priced at 595, and we're talking about buying it at 615 to 620.
Yeah.
If it was priced at 675, would you be okay with an offer at 650?
Yeah, I guess so.
You would. Okay, so as long as it's under the asking price, it doesn't really matter what the comps say.
Yeah, I mean, I guess so. Yeah. If
Yeah.
you're looking at it that way.
So that's the problem, right? It's not about how much under or over the asking price it is. It's really about the price that we're going to have to pay for it relative to the most recent comps. Does that make sense?
Yeah.
Okay. So the comps, we can agree, are all in the high fives, right?
Right.
So you're going to pay $15,000, $20,000 over the current comps, right? That's kind of the risk.
Yeah, I mean, the comps are all in high fives, like you said. So 595 would be right about what we'd be happy to spend.
So let's talk about the payment at 595. Do you have that info from the lender in front of you on what it was going to cost you monthly at 595?
Yeah, it's about 2,500 a month.
Yeah, so it's about 2,500 a month. So if we go in and we lock this house down for you guys at 620, let's say that's our max number. How much is that going to be in terms of payment?
It looks like 2,600 a month.
Oh, okay. So it's about $100 extra a month.
Yeah.
Okay. So in your monthly budget, when you're looking at groceries and gas and everything else, and when you compare it to your current rent, right? Right now you're paying, what are you paying in rent again?
24.
Okay. So 2,400 in rent. And how much equity do you get when you pay your rent every month?
Nothing.
You don't get any equity. Okay, awesome. And every year, does your rent go up every year or go down every year?
Up.
Okay, so next year it's probably going to be what, 2,500?
Yeah, I mean the landlord likes us, so like 2450.
Okay, 2450, and then maybe 2500, and then maybe 2600 in a few years, whatever. But along the way, right, you're not going to make any equity appreciate. You're not going to get any equity. You're not going to be paying down any equity. That money is essentially just going to be lit on fire for the benefit of you living in that studio that you don't want to live in anymore, right?
Right.
Okay, cool. So if we were able to, could you afford the 2600? Like, would that be comfortable as far as like a monthly allocation towards your living expenses?
Yeah, it'd be a little tight, but I think we can make it work.
Okay, because I don't want to push you $1 above what your monthly expenses are going to allow for. So if you're going to have to sacrifice on milk, we shouldn't buy it.
Okay. Yeah, I mean we can make it work for sure.
Okay, cool. So here's what's going to happen, right? We're going to get it. We're going to lock it down for you at 620, and your payment's going to be 2600, and you're going to spend an extra 200 a month than you were spending on rent. But you're going to get all these extra benefits. You're going to get the tax write-off, and you're going to get the equity appreciation. And now the best part is you're going to be in the game, right? And so for the next couple of years, we see, right, we think that there's a housing inventory shortage and that prices are going to continue to go up, and all of this might kind of flatline if interest rates ever go up again, which we don't know when that's going to happen. The Fed says a couple of years, but could be whenever, right? And so we're going to do that, and we're going to hope that the values continue to increase, and when you go to sell, that it's going to be worth at least or more than what you paid. What's the risk, right? The risk is it could go down.
Right. That's what we're worried about.
So there's a possibility that it could go down. So given all this data about the market and inventory, new home builds, the economy, and everything else, and what you know, do you think the risk is greater that you buy and then the economy goes to crap and we lose all the money and everything and it's worth less than what you paid in 2 years or 3 years? Or do you think it's more likely that your rent continues to go up and prices continue to go up and you just miss out on all that stuff as well?
Yeah, I guess rent going up would be a bad thing.
Well, it's like 100% certain that that's going to happen, right? And it's like a 10% chance that the value goes down. Now, here's the thing. I don't advocate that you buy a home in a 2 to 3 year time frame. And we already talked about that at the buyer consultation. And I know that that's your goal, is to get out of this one and into the next one. So you're either going to need to aggressively save so that you can keep this one as a rental property, which probably is a good idea. I think this would make a great rental. And so you need to aggressively save so you have a new down payment in 2 to 3 years. Or we need to hopefully be able to exit you out of this property and move you into that next one. Interest rates are going to be a huge factor in that, as well as a lot of other things. If worst case scenario, Dylan, and I'll end with this, worst case scenario, if you somehow were not able to save enough money or the market wasn't there or whatever, could you continue living in this house for the next 5 to 7 years if you absolutely had to, knowing that at least you weren't paying rent that was getting lit on fire every month?
Yeah.
Okay. So worst case scenario, you're just going to ride out the storm, right?
Right.
And by the time you're done, you're going to have a bunch of equity paid into that. And when the market goes back up, you're going to be able to capitalize on that.
Right.
Okay, cool.
Jesus.
And guess what? This one's recorded. So I'm going to be able to send you that so you don't have to take any notes. And you guys are going to be able to, you can break that down piece by piece and put that into your systems, right? You want to be able to go through that stuff. Was that helpful?
Yeah, I was talking to Chris earlier about scripting challenges, and that was certainly something to admire. So thank you. Yeah, that was great.
Listing price, I love it, Joe. It's only the opinion of two people. It's true. The price is always what a willing buyer and a willing seller are willing to pay. For EXP stock yesterday, that was $165. This morning, it became $135. Guess what? It's all about buyers and sellers. So at any given time, prices go up, prices go down, and you either need to be able to hold through the storm or you need to get out and take your lumps. And, I'm sure Dylan will be well-versed in short sales by the time he needs to be in the mythological future.
GME to the moon, baby.
All right. Anyone talking about them using their tax refunds to help buffer offering over ask? I have never done that. Has anyone else done that where they talk about their tax refunds to help buffer offering over ask?
I generally don't, only because with so many different unique situations, assuming there's a refund can get a little dicey.
I'm Yeah, I'm going to put it back to their CPA. They can talk to their CPA about that. And between their CPA and their lender, they got to figure out what they're comfortable with. But I always want to bring it back to like milk and groceries because it's really about the payment. It's not about the price. They get fixated on the price and everybody got burned really bad. So what I would probably do in those scenarios is like dig into their programming a little bit to understand a little bit more about the back end of like why they're sensitive to that. And what you'll find is they probably watched their parents lose their house to a short sale or a foreclosure. Or they probably had some friends or family or somebody, right, who got burned in that scenario. And so then it's your opportunity to educate them about the market of today versus the market of 2006 and 2007, and how this is not, you know, history repeating itself at this moment. Cool. All right. What other questions? What other stuff do you guys want to talk about today? So, what do you guys think? Do you think it matters if Zillow owns showing time? Does that affect your business in any way?
Listen, I mean, it matters because now if you use it, I mean, I don't use it because I don't do listings yet, but do you pay for showing time access?
Personally,
Yes.
Or just if anyone that uses it, do they pay for showing time access?
It's included in our MLS. We don't pay for
All right.
it.
So in theory, you're feeding the monster, right? On the other hand, someone else will come out with it must be easy to program with something like that. Like someone else will come out with something else. So, I mean, they're so big, it doesn't matter.
It's just another way they're going to try to cut out agents. Eventually they'll have it so that buyers can go direct to a house, book the showing with their phone, let themselves in. And I think that's where we need to educate consumers. Like this could lead to people having access to your home when they shouldn't. Or how do you feel about that?
Also, to play devil's advocate, what's to say showing time isn't already sharing data with Zillow, Realtor.com, Redfin, all these companies. They're an individual company at the moment. So from a data perspective, does it really matter? No.
I'm more worried about what this would say for the future and how they plan to use it with their brokerage. Like, again, can anyone off the street just book a showing and then show up at your house and open your door with their Bluetooth? Like,
but could that also mean that more listing agents, especially since they don't like Zillow, I'm assuming 90% of agents don't like Zillow, they're not going to even use showing time knowing that Zillow uses showing time, and make it so that you have to call or text the listing agent to book a showing?
well, interestingly enough, our market has gotten so crazy that showing time usage has increased dramatically. Because like in a normal market, it's easy enough to just manage it yourself and make a schedule and have your assistant book everyone. But now that we have PEDS, now that we have 15 minutes, now that we have the COVID rules, people have been using showing time a lot more. Like I've noticed an increase. It used to be kind of like a joke, like no one liked showing time. And now it's like everyone's using showing time because it does make it a lot easier when you have like 20 something showing requests. So, I mean, maybe it's just a symptom of the market. Like we weren't using it as much before. And John, I don't know if you've experienced this in OC as well, but it's like now it seems like there's increased usage given the, fervor in the market.
Here's what I know. I know that Zillow can't use showing time to book appointments at my listings unless I let them. And I know that I'm not going to let them. So it doesn't really matter. Like for me, it's a matter of controlling what I can control and controlling my portion of the show. So in the future, I believe that there will be three main categories that real estate is done in. I believe that there will be the category of real estate that is done with Zillow and with Amazon and any other sort of disintermediary that wants to create an online experience where you can go to the house, click a button, go inside, don't work with an agent, all that crap. That's going to be one segment of the market. You're going to have another segment of the market, which is going to be like the middle portion, which is going to be filled with mega teams. So that's going to be the people with the big ad budgets, the people that are paying to play with Zillow, the mega teams that do hundreds and hundreds of units. I think that's going to be kind of the chunky middle. And then I think the left-hand category or this far side is going to be done in a more concierge, personalized way of doing business. And I think that the only way that those people survive is if they have a very deep relationship and quality relationship with their database. And so it's not about your customers are already going to Zillow, and Zillow just reported earnings today, if you guys didn't catch that, and they made more money than they've ever made. Even they exceeded their already very high bar, right? Zillow is not doing a bad job. They're doing very well. right? And we are allowing them to do well because agents are stupid and they're willing to continue to sign more and more expensive contracts because they say the views go up. Well, of course the views went up, right? Everybody's trapped at home. But guess what? The same number of houses were sold, whether or not there were 200,000 views or 100,000 views. It does not impact the total number of properties sold. And so you're actually, by having more views and the same amount of houses, you're actually paying twice as much money for 50% of the service, essentially. You're getting less results out of it. And so what that looks like, they're already going to Zillow. So what we need to get them to do is to go to Zillow anyway, but then call us. And so if you're not clearly communicating that Zillow is a tool, but it is not your friend, Zillow is not your solution, Zillow is actually more expensive. If you guys have not taken an in-depth look at what these service companies cost, who here uses Postmates or DoorDash? Or any type of food delivery service, Uber Eats or anything, right? You guys do? I do. I spend way too much money on that. Pop quiz, which is cheaper? For me to call the restaurant and go pick up the order myself, or to use Postmates or DoorDash or Uber Eats, which is cheaper? Right? It's cheaper to call
DoorDash.
right?
Yeah.
By a lot.
It depends on who. Like if from a customer, DoorDash is more convenient and cheaper. Actually, no, it's more expensive, but it's
There's always a fee or a service fee.
Right. So I am their target consumer. I am willing to pay a premium, right? Because I don't want to leave my house.
right.
I'm willing to pay a lot more money than if I just called the restaurant directly. The bummer is the restaurant gets screwed too. The restaurant receives less revenue overall because I went through this third party. And so we need to educate, right? We need to educate the consumers, the people in our database that we have a relationship with, to know that yes, Zillow is a great tool, but if you sell your house to them, you're going to pay a 10% commission. If you work with me, you're going to pay 6%. You're working with a large corporate entity, you're not working with a small business. How many people have ever supported small business, right? Small Business Saturday, Main Street buying, farmers market, whatever it is. Do people ever support small businesses and walk away and they're like, damn it, wish I hadn't done that? Nope, doesn't happen. Because it's an American thing, right? It's like this, it's the spirit of America, like the little man, the rags to riches story, right? The small business. Stories sell. You guys need to get more comfortable with the narrative that you are one of the most important small businesses in your market. And if you don't see yourself that way, you're not doing it right, right? You are one of the most important small businesses in your market. Do you know how many people touch a real estate transaction? It's like 100. There's like 100 people who get paid for every house that gets sold. Start to think about it. You got housekeepers, photographers, stagers, marketing people, real estate agent, title company. But who works at the right? There's like 4 people at the title company, and all the people at the escrow company, and all of these other people, right? The home warranty and the insurance and the termite company and the home inspector, right? There is like a gajillion people that are all tied to the economics of a real estate transaction. And you, the real estate agent, are the captain of the Small Business of America team. And so if you can portray yourselves as the small business that you are, that is community focused and community driven, then you're going to get people to want to work with you over the large corporate entity. Are you ever going to get 100% of them? No. Do I still shop on Amazon even though I know better? Yes. Does Amazon control 100% of sales, right? Of retail sales? No. Do they even control 100% of online sales? No. So you're gonna lose a segment of the market, but you have to make sure that the segment of the market that you keep, that you can control, and that you can provide a value proposition that is relevant to them, which is why the most important thing you can do after all of that is align yourself with the community. So I'll give you guys a freebie here, and then I'm going to open it up for a few questions and we'll wrap it up. So I had a really smart lender who came to me with a brilliant idea. And I'm going to give this to all of you, and you think about how this applies in your own world, because it will not apply to you directly. So he came to me and he said, hey, John, your kid's about to start Little League, right? And I was like, yeah, he's about to start Little League. And he's like, cool, my kid's been in Little League in Huntington Beach for the last 12 years, right? 10 years, whatever it was. He's about to graduate or whatever. They've been around the Little League for a long time. And he said, you know what never made sense to me? He said, I never understood why a real estate agent didn't just go directly to the president of the Little League and tell them, I'm partnering with you. I am a local real estate agent. I'm a father. I'm going to be one of the coaches. My kid's starting Little League here, and I'm a small business owner in the community, and I'm going to partner with your Little League program. And every home I sell, I am going to donate $200 to your Little League program. Now, that doesn't matter whether I got that referral from somebody in the program or I got it from one of my friends. It doesn't matter if it was my own lead. It doesn't matter if I got a Zillow lead. I'm going to do this across the board. Every single home I sell, I'm going to donate $200 towards the Little League program. Now, if you help me sell more homes, we will make you more money. So I'm not saying you have to refer me anybody, but I'm just telling you right now that every home I sell, $200 is going to the Little League program. Well, do you know how strapped their budget is? Do you know how thin the margin is for uniforms and supplies and coaches and referees and all that shit that it costs to run a Little League program, right? That is a very small business with very thin margins. And when things like COVID hit and everybody wants a refund, but the uniforms were already purchased and the money's already gone out of the bank account and nobody's signing up for next season, so there's no forward revenue coming in. Do you know how hard it is to operate something that is so important to a community as a Little League? Do you think of many things that are much more important to a community than a Little League? There's not, right? It really matters. And so if you were to step up and partner with that Little League and say, hey, so it's not about, hey, if you give me 10 referrals, I'm going to do X, right? It has to be, I'm going to do this anyway. And maybe it doesn't happen in the first 3 months. And maybe it doesn't happen in the first 6 months. And maybe it takes 2 years. But if you stay consistent with that message of partnership, of a win-win, you're going to become known as the real estate agent that supports the Little League. And as your business grows, so will their ability to provide a high quality product to the community and to support the youth of the community. And you are going to eventually, they're going to name the field after you. That's what's going to happen if you stick through this plan for a long enough period of time. But what almost every single person will do is they will not do it because they're scared to talk to the Little League president. They will not do it because they think it's illegal, which it's not. They will not do it because they're worried that $200 is not in the budget and I'm not going to be able to make that work or whatever. And remember, these are made up numbers, so it doesn't really matter what you do. Then they will do it. They'll talk to the president, and then the president might be like, oh, well, we can't refer you to anybody. So then they'll stop right there. Or the president will say, that sounds great. And then they'll do it for like 3 home sales, and then they'll get busy, and then they'll stop doing it. Or 2 years later, their kid will quit Little League. He doesn't want to play baseball anymore. So they stop doing it, right? There's all of these things that are going to prevent you from having success with a plan like that. But I can guarantee you that if you started that plan today and you worked that plan consistently for the next 5 to 10 years, they will eventually name the field after you. But you have to be all in on that. That has to be like your thing that you really are passionate about, that you want to align with the community. Now, I told you guys, this isn't going to apply directly to all of you. So don't go partner with your local Little League, but I want you to use that as an idea of how you can think about something that is very important to the community, that you can support and you can buy into, that you can give of your time and of your money, and you can tie your entire, because there's nothing more hometown and American than real estate. That makes sense?
That may be Little League.
Maybe Little League. I mean, honestly, right? So that's my community tie-in example. What are some other ways you guys could tie in your business to something important, sort of some pillar of the community?
It's funny you should mention that. I actually had a question about that. I just recently had an amazing experience. I had to get my car fixed due to a fender bender that I was in. And I had just an amazing experience. They were perfect. And from the minute I got out of my car to picking it back up. And I was thinking, well, can I send them like an edible arrangement or something and just say something like, if I can ever help you with service, or just I don't let them know I'm in the business, but would like to show them appreciation as well.
Are they a small business or are they a large business?
They're Caliber Collision in I think it
Your
was
business.
Mesa.
It's like a franchise, I
Yeah.
think. I don't know if it's a franchise or not, but it is big business. It might be small owned. The best way to help if they are a franchise or something like that, and on a B2B perspective, is to give them referrals.
Okay.
Every small business wants referrals. So if you want to get them to refer you business, the best thing you can do is send them referrals. I'll give you guys a real life example. One of the best kind of referrals I can get outside of a hot listing priced well in Orange County, California, is an agent who wants to improve their life and build their business and is open to talking about eXp Realty. Well, I was talking to a partner, and this guy works for the real estate school, and so I said, hey, the best thing would be to send me people who are open to talking about EXP. And the next day, literally the next day, the guy sent me 10 referrals. Do you know what I spent the next few hours doing? I spent the next few hours just masterminding how I can send this guy more referrals. Like, what kind of budget do I need to put together? What kind of ads do I need to put out there? Like, how can I give a commensurate value to this guy for what he has led with? I literally had to stop my whole day just to mastermind about how I can give back those referrals. So from a business to business perspective, I think it's more like that. But things in the community that you can partner with are schools, Little League, you know, some type of institution, right? Like a long time business that might be struggling or suffering that has a really, really diehard following.
What about churches?
Churches, absolutely. If you become the guy that happens to sell real estate, but is the most supportive person for the church and just doing everything you can to help them achieve their goals, you're going to tap into that community aspect.
I mean, I can't walk into a church, but I went to Catholic school as a kid, so that can't hit.
Hey, that works.
I would like combust if I walked into a church right now, but
Yeah, we know. Can you do Pee Wee football? Is that another option?
Pee Wee football, anything. Look, people care about their pets and their kids. They care about religion. So figure out something that is community based and support it and tie your business to it. And that could literally be a neighborhood. It could be being awesome. Yeah, Elks Lodge, Chamber of Commerce, sports leagues, Oklahoma Rescue. Those are really good, Nicole. It could be just your neighborhood. It could be that you're the person who sets up the Easter egg hunt and the bounce house and the 4th of July parade, right? You can create community literally in a community, but you can also partner with an organization that already has a community. And by doing that, you can tap into that and be seen as sort of a hero for that cause. So hopefully you guys can think a little bit more about how you might be able to integrate that with your business. All right, let's open it up for any questions you guys have before we wrap up.
I have a question, but I want to open it up to everyone else first before I go.
Okay. Dylan, it's you.
Sweet. So I currently have a client right now. I think we've talked about this a couple weeks ago. They are buying a multifamily and it closes March 4th. I had a conversation with him the other day about renting out that second unit that is in his home. It's a 3-bedroom, 2-story unit. It's massive. And I wanted to, I like asked for the listing and he had some reservations. So I didn't know if you guys had any strategies on kind of what to say, how to kind of convince him. I had to basically say that we would be doing it without charging them a broker fee, but he still kind of had reservations.
What were the reservations? Could you pinpoint them?
Yeah, so one thing he said was like he was worried that people wouldn't be willing to pay the broker fee, the security deposit, and the first month's rent, and that he wanted to. That's not what I meant. And he wanted to, he wanted to try it for himself and see how he got, but he was, seemed like he didn't know where to start. And I was very much like, hey, we're going to do all the marketing for you. We're going to make sure you get a ton of people in the property to see it and get that rented as soon as possible because you need that income. And he was still kind of like, I don't know, man. I don't really want people to spend that much money.
How benevolent.
Yeah.
I would do two things. One, I would offer to help him for free. Just help him. So like help him figure out how to do it on his own. Usually DIYers, right? Anybody here do it yourselfer? Go to Home Depot and mess up your floorboards. So like DIYers, it all sounds good when you're like planning it out in your head. And then by the time you make like the sixth wrong cut and you have to go back to Home Depot for more material, if there's like a dude standing in the parking lot that's like, hey man, I know how to do baseboards, you're like, how much? Like, I don't want to do this anymore.
That's
So-
another. That's sorry, John. That's a whole nother thing that I haven't even asked a question about. But he also wants to do. He's redoing his kitchen and basically redoing his entire first floor. And me and a close mutual friend have both been saying, hey, use a contractor because you're gonna need it. And I've had to draw from personal experience saying that he needs that. And he's been very much like, nah, dude, we got it, we're good.
Yeah, so he's a DIYer, right? These are for sale by owners. They're all the same, right? A for sale by owner is just a real estate agent without a license. So these are all the same thing. And it's just a mentality of somebody feeling like they can handle it. And so you just continue to add value and stay by his side so that when he needs help, when his wife finally smacks him on the head and says, maybe you should hire somebody to fix the flooring, you're the guy that he hires, right? That's the best thing you can do in that scenario. The second best thing you can do in that scenario is go find more new clients.
Mhm.
Because we don't want to have baby bird egg, right? Nobody wants scrambled eggs for breakfast. And so if you spend too much time babysitting somebody who's not in the mood to hire for your services, then when he eventually finishes the project on his own and leases it out on his own and doesn't refer you anyone, you're screwed. So
Okay.
help, add value, make the most of the opportunity, ask for referrals, right? Say, hey buddy, I'm gonna help you do this for free. I'm not even gonna get involved. I'm just gonna teach you how to do it. But I'm not going to get paid. So in return, I would love it if you could help me, find one or two people who want to buy or sell this year. Would you be able to maybe?
So kind of a tit for tat type of thing.
Turn it around and just say, hey, I'm going to do this for free for you, and you don't have to list with me. And I get it. You don't want to hire an agent, whatever. But lots of people do hire agents, and they need agents. So when you find somebody who needs an agent, will you recommend me? Because I'm going to help you, but this is why. And you can just be transparent about that. Like, your time is valuable. So like I can't. Yeah.
I would rather have the home sale than the rental anyway, so that would make perfect sense.
Right, which is why we help people rent. The only reason we help people rent is so that we can get referrals to buy.
Oh. Sorry, I'm in the middle of that right now. I'm texting her as we speak.
but you should do it, right? But you should do it because they turn into buyers.
Yeah.
You should do it because they turn into referral partners. And you should do it because they can write you a review on Google and Yelp and Zillow and wherever else you want to review. So you should do it, but you should only do it strategically with a plan in place so that you can get what you ultimately desire out of it on the back end. And that could be in 6 months, that could be in 6 years. You don't know where that goodwill is going to take you, but that one person could end up referring you 10 clients over the next 10 years and end up making you hundreds of thousands of dollars. So always,
you just spoke to me. I didn't mean to interrupt you, but
all right, give me one aha. What did you guys get out of today? What'd you learn?
My favorite part, and this goes back a little bit to my other career. One of my favorite parts about going to places where people that have been in it longer or know more than me is when you're sitting there listening to them. And I was like, and you start to realize, wait, I'm already doing some of these things and I don't even realize I'm doing them correctly. And so when you were scripting with Dylan, some of the things you were saying, I was like, shit, that's what I would have said. And I might not have said it exactly the same way, but I was like, oh, wow, I do actually get this either intrinsically or because I'm learning, whatever it is. You have that moment where you're just like, I should maybe know what I'm doing a little bit, We
all need that reassurance. So that's cool.
Yeah, totally. So that was great. That was cool today.
What else did you guys get out of it?
The rental analogy to help people get over the sticker shock of bidding over ask, offering over ask, so that people realize it's not so bad. It's $100. Can you afford it? What would your rent be? I just think the rent analogy or the budget analogy is a great way to help people realize, hey, it's not that big.
It's real.
Yeah.
like, you know what we don't teach kids? We don't teach kids like family economics. We don't teach kids how to budget. We don't teach kids how to shop. We don't teach kids how to trade stocks. We don't teach kids basically anything that they need to know to be adults. We don't teach them. And we have a whole generation of kids that were given participation trophies. And that's neither good nor bad. That's a lot of the kids, people on this call, right? Where that we just live in a participation trophy society, or we did for a period of time. And the problem, and there's a really interesting Simon Sinek quote about this, but it doesn't matter that their parents didn't teach them. And it doesn't matter that they don't know. What matters is that you understand that there's that gap, and it ultimately becomes your responsibility to fill that gap. And so if you don't teach them these things, then how the fuck are they going to know? So it's an important exercise to do with people, because everybody's paying something to live somewhere. So there's what they're paying and what they want to, right? And then there's the gap. One more aha. What's one more thing you guys learned? We'll wrap it up.
Well, you gave me incentive to work with one of my favorite charities. I was going to wait until I made my first $1 million selling a home to give to the New England Epilepsy Fund. But why wait? Why not just start now? And now I'll give $200 for every home that I can sell within our community, and just keep building and establish that rapport and just keep growing. And that way we all benefit.
And start with the people that are the most passionate about that cause. Start with the people that you know that are already into that cause, that are already in their network, because those are the ones it's going to resonate with, and they're the ones that are going to think of you. And if there's no other real estate agent giving $200 or whatever it is, then it might as well be you, because you've shown that you're willing to lock arms with something that they care about. So don't ever be afraid to put that community involvement or charity or however you want to do it at the forefront of your business, because it sounds a heck of a lot better to, hey, I have a goal this year to sell 10 homes. And if I sell 10, when I sell 10 homes, I'll be able to donate $2,000 to the epilepsy fund, right? That's a lot better than, hey, I want to sell 10 homes this year because I got my eyes on a new jacuzzi.
Why are you hating on my jacuzzi, John? What's going on?
It's my jacuzzi, man.
Oh,
right.
Wait, are we both into jacuzzis? Is that what's going on here?
I just bought mine. EXP bought mine for me, so I just got one of those EXP jacuzzi specials.
I'm wicked jelly. I want a jacuzzi like right now.
Well, you got to get one, man.
Well, every day when we script, they're all worried that I'm going to drop
He doesn't want a jacuzzi. He wants a jacuzzi in the condo
in my condo.
10 people. He doesn't want just a jacuzzi. He wants a condo, a jacuzzi, that fits 10 people that he can have parties in. And that's what we script about every single day.
And no white walls. No white walls are allowed.
The purpose,
like I said, I'll paint them for you.
The purpose of business is to fund the perfect life. All right, guys, have a good one. You know how to.
Thanks, John. Appreciate it.
Thanks, John.
I love you.